Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong historical structure level for this market. This area was in fact acting as previous support, preceding all these rejections to the upside. And we can see that after a break below the zone, all this previous support was turned resistance here and was respected as resistance with the creation of this red candle. After that, we had the break back above the zone. This previous resistance was once again turned support and has already been tested as new support, and the market has already started rejecting it to the upside. So in a situation like this, we could expect more potential bullish price action, as already the market has shown us that it has the possibility to create every time that it tests this zone. So from here, we could expect more bullish continuation as already happened here, here, and here. Dropping down on the weekly time frame, what do we have? Now, if we go down on the weekly, we can see how from a weekly perspective, this area is definitely a quite significant structured zone. In fact, from here, all these previous rejections to the downside were created. All this previous resistance was turned support after the market broke it to the upside. It got retested here. The market started rejecting it to the upside, so we could expect more potential bullish price action to be created away from this zone. So here in the weekly, everything looks very bullish. Dropping down in the daily time frame, what do we have? From a daily perspective, first of all, I did speak about GBPUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Again, here we had this impulse and correction, and from here, I explained all the reasons for which we could have the creation of this higher high. And I spoke about GBPUSD again here and here, explaining both times why we could expect the creation of new higher highs, which is in fact exactly what the market gave us. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. Now, before we continue further with our analysis from a technical perspective here on GBPUSD, by looking at this structure from a daily perspective, let's first go and see what we have when it comes to the commitment of traders. So what institutions are doing in this market. The first thing we have to keep in mind is that if we're checking the data for the GBP, we are actually already checking GBPUSD because all currencies on the spot are traded against the USD. So if you're looking at data for the GBP, you are already looking at GBPUSD. And what we can see is that in the long term, we had a massive shift to the bullish side for this pair. If we look at the institutional side of the market, in fact, we went from having minus 24k net positions all the way up to having plus 6.7k net positions. This shows how institutions went from having more shorts than longs to now having more longs than shorts on this currency and on this pair. So this means that overall the positioning is shifting to the bullish side for this market, and this increases the probabilities that we could have more bullish continuation. Now, if we look at the technical side of this market, we can notice how after this impulse in creating this move to the downside that the market is currently creating, it is also printing an M pattern. And in general, after the creation of an M pattern, what we could expect is a potential reversal higher for the completion of the M pattern at the neckline, which is the previous support turned resistance. So here in the daily, if the market will actually create this M pattern, there is definitely the possibility for a potential reversal higher for the completion of this M pattern at the neckline. And this also means that if we will have the creation of this M pattern, this would be a quite interesting area inside of which institutions could be adding more longs on the GBP, therefore on GBPUSD, because we have already seen that they are more interested to the bullish side of this market. So if we will have the creation of this M pattern, how we could be approaching a potential reversal higher for the completion of the M pattern at the neckline? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the price of the mentorship program from $497 all the way down to only $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, you can get a full refund credited back into your trading account if essentially you move your trading there. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board, and at least go and check it out at transparentfxtrading.com. The link is also in the description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.